We are talking ahead of Jackson Hole here, catching up with Todd Bubba Horwitz of BubbaTrading.com. Bubba, always good to see you. Welcome back to StansberryInvestor.com.
Daniela, it is always great to be on with you, and it's a pleasure to be on with you and Stansberry at the same time.
Thank you. Well, we are now officially 1 week away from the big Jackson Hole Economic Policy Symposium. What can we expect from the Fed? A lot of ground to cover with you here today, Bubba. But first, I want to get your thoughts on China and how much of a role and talk will be surrounding China, the tariffs, the current trade war. Will that be top of mind here?
Well, I think that as you've seen and maybe you've noticed with the new administration, we're giving everything back to China. There isn't much going on that is negative towards China. It's negative to Americans and to the citizens here, but they basically handed over the keys back to China, just like they did with Saudi Arabia, because of course this administration wants to give away as much as they can to as much of the world as possible and not take care of the United States, which is why we are having so many major problems here right now.
Well, Wall Street is pricing in that Powell will speak or do something to counteract the tariffs, the trade war. But I guess the question, or the lingering question, is how far will he go? Because as you know, Bubba, he hasn't been the most communicative person out there. But right now, it seems that the nuances and what he says will be more important than ever here.
I think so. And I don't think they'll do much, but that they may test. And again, they're very good at trying to test things out. And they went from transitory inflation to temporary inflation, which doesn't sound like much, but to them, that was just one step closer. They know they need to taper. They know they need to stop the bond buying program. They know they need to do a lot of things, but they don't because, of course, Powell wants to get reappointed. And unfortunately, the Federal Reserve has become a political office, not a private banking system, which is what it's supposed to be. But they may give it an edge and try to push tapering a little bit and see how the markets react. If the markets react adversely, we can have a recreation of the taper tantrum from to almost 8 years ago, and see them immediately revert back and say, "Oh no, we're not going to do anything." But what's happening here at the same time, Daniela, is the bond market is going to start to push. I think the bonds took one push before and backed off a little bit, but I think they're storing up their bullets and going to make one more big push at the Fed. And remember, the bond market is the biggest market in the world by at least 10 times. So they have the capital, the bullets, and the wherewithal to really give the Fed a run for their money.
Well, they're definitely in a liquidity trap. And as you say, has monetary policy reached the end of the road here?
Well, I think the monetary policy is stupid. And I think it's ridiculous. And I think when you're trying to finance and fund all of this stimulus, which is really not really the stimulus, they're really trying to fund into the universal income. Okay, that's what this administration would like to get. They're buying political capital. And so they're doing whatever they can to create major destruction and wipe out small businesses by their very policies of the people that they're supposed to be protecting. So I think that the thing is a mess. And I think that the Fed is, as always, is wrong and will be wrong because in their history, they have never been right.
So they're in a no-win situation, especially when it comes to rates here. If they cut rates and the economy is growing at a 2% pace, as the Atlanta Fed suggests, they're backed into a corner. If they don't cut rates and the markets tank, then they also lose. So it's a no-win situation. Where do they go? What do they do?
They should do nothing. You know what? There's an old saying, Daniela, they should let the markets be free and discover what the right price should be, because the markets can do that. They're very capable by the very measure of buyers and sellers that will tell you what the market should be. Certainly, we know that interest rates could be much higher and sustainable at much higher rates. But of course, they've created so much money and so much stimulus that they've got to pay it. So they're really protecting the government and the interest payments that they have to make versus letting the markets be free. So really, it's a self-serving agenda because the taxpayers pay for it no matter what. Okay, we're going to pay for it no matter how they do it. So would you rather pay more interest rates and not have stimulus, which the stimulus is the dumbest thing ever. Okay. It's just a terrible setup when you have people staying home and companies need workers, but how are you going to grow if you have people staying home because they're getting paid more money to stay home? So they're not in a no-win. They have to make a decision that rates should be higher because the market can stand higher rates with no problem and stop this ridiculous inflation, which they refuse to admit is there.
I hear you loud and clear. I hear you. How confident are you that change will come after this meeting? Because you and I both know we've been covering this this symposium for years now. Yes, there's a lot of pomp and circumstance surrounding it, but how much really changes after it? It's a lot of theory, but not really practice, right? It's a place where they read academic papers. It's not necessarily, you know, Jackson Hole is this magical place where all solutions come out of. So are you confident that change will come?
No, I'm confident that it will continue to be the same ridiculous, lousy organization that they are. And as I said, they've become a political hack instead of being the independent that they're supposed to be as a Federal Reserve. They've become an organization that's wants more political power, which, you know, they're supposed to be private, right? It's a private organization, a private banking system, but it's really not. It's a political organization now, and that's what they become. So they're going to do kind of what the administration wants them to do, which in my mind is criminal in its own right. And it's terrible.
I'll be curious to see how much talk comes out surrounding central bank digital currencies. Are you?
That is a no doubter is happening at some point, and I believe it's going to be a lot sooner than anybody thinks. And the day that happens, you can say goodbye to everything else, because the digital currency that will track you from the day you're born to the day you die. Anything you do that you may not want other people to know you do, everybody's gonna know that you did it. That's the real problem.
Goodbye to freedom, goodbye to privacy.
Exactly. Just what you're seeing, like what we're saying with the social media companies right now. There isn't true freedom in social media. You've got people, if your statement's too conservative, it comes down. They don't allow it to stay up there. That's a problem. These are things, right. The freedoms are being taken away from us.
I was going to say goodbye to paying your cleaning lady under the table.
Exactly right.
Okay. I want to conclude here by talking gold. You've been writing a lot about gold recently, saying the metal has somewhat been impressing you since its flash crash on August 9th. It's been making higher highs here.
It did have, as I will tell you, I thought it was a forced liquidation on that Sunday, August 8th, Monday, August 9th. And you saw a very dramatic move in a very short period of time, which usually indicates that somebody got forced out, probably a major firm or maybe even a country that had too big of a position, needed the money, and they get forced into liquidating it out. And since then, we've actually bounced very nicely from there. And we're still short from a trading standpoint, but as you know, I'm always a buyer of physical metal that I store. Okay. But from a trading standpoint, we are still short. And I think that this will be the key numbers up here somewhere, right around, let's say, the 1800 level or so is where it might reverse and start to push us back on the long side. But, the bounce has been impressive, but again, much ado when you consider the sell-off that we had going into it. So it's been really just recovering from the flash crash. Let's see what happens from this point forward.
Right. The bounce has been impressive, but when do you cross that hurdle into euphoria? People want 2,000 gold above here. Everything seems to be stacked in gold's favor. Why isn't it moving higher at a faster pace? People want it faster, Bubba.
And there's your answer. See that anytime you're looking at a market, right, and you get news or you have something that the thing should be doing better and it's not, what is that telling you? It's telling you that the market is telling you it's already priced that action in. This is what we have to understand as either investors or traders, that the markets, especially today with technology, they're so much farther ahead that there is no surprises. So markets have already priced in everything that they need to know. And right now, gold does not want to go exploding higher. Now it's trying to work higher. And if it does change the trend and break above 1800 and hold, then we could see a run to 1850, then 1900. But until we can break above that resistance level, you're not going to see any major movement. And that's what you have to understand. The markets know what's going on. It's not like they're hidden from the fact of the whole world being in turmoil here.
So let the market do its thing. Let's gold do its thing. Last question for you. That flash crash, because I didn't get to speak to you when that happened. But when we see movements like that, right? I want to know what should the viewers at home be thinking or knowing? I mean, is that pure market manipulation? Is it just because the European banks are on vacation and people are doing some funny business over here? Or what's going on? What do we need to know? What should our emotional stance be?
You should be, in a move like that, you should be looking to be a buyer, okay? Anytime you see a dramatic push that fast at one time, usually means you want to do the opposite of whatever the market is doing. So if it's getting flash crash down, you want to look to be a potential buyer, because the probabilities is that is the low of that particular move, and it's going to come back the other way, whether it's going to go back and take those lows out later. But that was, to me, as I said earlier, a forced liquidation. That was someone who was forced out of the market. And you could see by the speed and the price drop at that level is not buying and selling. That is somebody dumped a lot of gold at that time, which is obviously unusual, overnight, thin market to begin with. And you put out a big order that's meant to get crippled. And most of the time you look to do the reverse of what that move is, which we've actually seen in all of the metals, even with silver being still ugly, but they've all bounced from that flash crash low and made a little bit of move. Now, the real question is, will they break out back to the upside after that, which is very possible, but they still have to clear the hurdles on the way back up.
All right. Good thoughts. Todd, Bubba Horwitz of BubbaTrading.com. I always enjoy speaking with you. Come back anytime to StansberryInvestor.com.
Thank you, Daniela. I appreciate it.
And thank you for watching. We'll have much more for you in the meantime. Don't forget to sign up at DanielaCambone.com for exclusive interviews and very cool stuff you can't get anywhere else. That's it for me. Thanks for watching.